I have the Chief Executive Officer, Afrinvest Securities, Ayodeji Ebo. He joins me now via Skype from Lagos Island for more on this discussion. Ayo, it's great to have you join us on the show.
Yeah, thanks for having me.
Ayo, before I move straight to the exchange, I'm sure you're aware of the figures. Inflation is out again on the high side. And all of this have one or two effects, one way or the other, on trading at the market. Tell us, how did this come to you? Were you part of those expecting it to go to 12%?
Yes, if you look at in terms of the trend, December it's the festive season, and we expect that, well, even on a month-on-month basis, though moderated compared to month-on-month in November, but you would expect that there will be an increase because of the increased demand relative to other months. And that is why you'll see it closed at 11.98%. And if you look at, if you do a breakdown of that figure, food inflation increased to about 14.67%, relative to about 14.54% in November. So we know the land border closure is also a major pressure in terms of food prices, but the demand was significantly higher in December. We expect that there will be some form of moderation in January. Also looking at the core inflation, that also rose on a month-on-month basis. And we can also attribute that to increase in terms of prices or in terms of imported goods. So, despite there's been stability in terms of the exchange rate as well as energy prices in December, but we feel that there will be some form of a bit of moderation in January due to lower demand relative to what you would always have during the festive season.
So for very quickly, if we are going to look at this decrease we expect in like a month of January when the figures are out, the central bank has also said that is what they expect. What do you think we should be looking at? The borders remain closed, temporarily closed as it is at the moment.
Yes, I think that would continue to, in terms of that's like the downside risk to inflation, because when you check in terms of the basket, over 51% accounts for food. But you look at what in the short term, that prices will remain elevated, but we feel with some of the demand, the local guys are also trying to see how they can also fill the demand. So when you look at it in terms of poultry, farm now, for some of them, a lot of people are going into that. And it's also helping to reduce. It's going to reduce the price as we progress. And what we know that is also going to also improve in terms of generate employment. But beyond that, we feel that this land closure order is a temporary measure that doesn't solve the problem entirely. And I believe that it would be reviewed and very soon, maybe better organized, and also to reduce in terms of banned items that's been smuggled in. I think with that, we may see some form of moderation.
Ayo, very interestingly, let's cross straight to the exchange. With all of the moves by the Apex Bank towards the end of the year, many thought that more attraction will be on the equity side now and more money coming to the exchange. We saw the year starting, well, on a very good note. But what do you expect as we move on, talking about trading at the stock exchange?
Yes, I believe that would from time to time we would see demand from the local institutional investors. The PFAs, in terms of for some of them, have begun to take position, because when you look at it in terms of dividend yield perspective, it's the average dividend yield of the market is around 8%, and you look at banking sector is almost around 10%. Some of the good stocks, their yield is as high as 11-12%. By the time you compare that relative to the low yield environment, that was on Wednesday, the primary market auction closed at 5.02 for 364 days. So you want to look at 90 days close around 2.5%. So taking a position in equities, though in terms of has its own higher risk relative to fixed income, but looking at dividend yield perspective, we'll be seeing interest from time to time because especially the PFAs and fund managers, there will be maturities and OMO maturities that they bought last year, and they are unable to reinvest in OMO now. And even when you look at in terms of deposit or placement rate from the banks, it has gone as low as 1-2% because of CBN policy or loan to deposit ratio. So we feel that it's an exciting time for the equities market. We feel that in terms of fundamentals still remain strong. However, there's still the fiscal authority policy that should drive the market, that will attract foreign portfolio investors. Though we are looking at this, we're expecting a situation where local investors dominate our market to avoid any major volatility when the foreign portfolio investors are pulling out. But for now, I still feel with the way the market is structured, almost a 50-50 basis, we still need the participation of foreign investors to enjoy the full gains of the market.
Well, one way or the other, the macroeconomic indices also have effect to play in all of this, talking about inflation, because that also will affect the proceeds of these companies that ought to be listed or that would come to the exchange one way or the other. In one word, what do you make of economic issues affecting trading at the floor?
Yes, and that's what I was trying to touch on then. If you look at the opportunity in the capital market, if we see, especially looking at, for instance, the power sector, if we are able to implement it, government allows NEC to implement in terms of the tariff review, that sector will become very valuable. We've not seen any capital market support, any support from the capital market for the power sector, because likely most funds were received from the banks, which are mostly short-term. To solve the liquidity gap in that space, we need to make it more viable, and capital market can provide long-term funding for that market. The PIB bill, we're expecting that before the end of this year, they will pass that and it will open it up. So either people coming to raise bond in the fixed income market, or even raising capital. The insurance sector we expect to see some form more recapitalization of the insurance sector. So there should be more in terms of capital raise. Okay. Also looking at the banking sector, the CBN also indicated that it may come earlier than even expected. So there will be some form of equity capital raise in the market.
All right. Ayodeji Ebo, the Chief Executive Officer, Afrinvest Securities. Thank you very much for sharing your time with us on the show today.